Alright, hey everyone, and welcome back to my channel. This is Emmanuel, and I also go by the stage name ODB because I love to make music, so it's a passion. So please just try to listen to my music. I promise you it's good. So, first of all, today I just want to talk about the truth about Forex and the truth about Forex, and I'll also show you some weekly reports on trades that I took and some screenshots of those trades. So, first of all, I just want to talk about the matrix, the truth about Forex, the matrix. Now, the matrix is run by people I like to call the insiders, which is a minority of people. They're all over the world. They're like the top political sharks, the top heads in governments, and people like that. While us, the outsiders, the majority of people who are just normal civilians, citizens, just going about their daily life, going about their normal jobs. Now, these people in the matrix, they have agendas and they want all the money in the world to themselves, all the power in the world to themselves. Now, we don't know them. We don't know a lot of them personally. Not personally, but we don't know a lot of them. Like we don't know them at all. And in a way, I guess that's just how the world is. Now, why are these people? They're not important, but they're important just in the sense that you should know that people like this exist. These are people who, if the COVID vaccine was ever to be made public, they are going to be the first set of people to get it. And they're also going to determine how public the vaccine should go. So, how are they related to Forex? Forex is just one of the branches or aspects that these people use to show their influence and power over the masses. Forex was not something that was designed to give us money, like I've said before, but it was designed to take our money. And if you're someone who is struggling to make money and you're trying to make money and you think Forex is a good idea, I just want to stop you there. Please know what you're doing before you put money into the foreign exchange market. Forex was designed to take our money. Please try to get a mentor or watch YouTube videos. And I strongly recommend you read books because you need to gather some sort of knowledge about this industry before you go into it. There's a lot of truth untold about the Forex market. Now, the Forex market is a market that trades 4.6-ish million dollars per day. Please don't quote me on that. And over the last year, like there's been an additional $1 trillion to the trading industry. Now, you could ask yourself, how come like for years it's been like around that $4.6 trillion ish, and then over the past year there has been like an additional $1 trillion. I have a huge assumption, and that is COVID. Is because of COVID. Now they enforced COVID, enforced a lockdown, and right now, as I speak to you, we're all still experiencing um, COVID, COVID-19, as they call it. And, we see news everywhere, everyone is scared. So, what that lockdown basically did was to make people lose their jobs and actually not just have jobs for a long period of time. Therefore, as a human being, it's part of your instinct and nature to want to survive. So you're going to want to look for means to survive. And since you cannot go to your usual job or workplace, you can't go anywhere to make money, you're definitely going to be looking online to make money. And we all know that one of the biggest lies about the Forex industry is that it is the fastest and easiest ways to make money. The fastest, yes. The easiest, no. Forex is actually one of the hardest ways to make money online. The only people who make money from this are those who have spent years of practice and experience trading and building their craft, and those who actually trade along with the banks. And even if a lot of people spend years honing their craft, they still don't become successful traders. That is the truth of the industry. So you need to know what you're doing before you get involved in this. So basically, like This is just my own assumption about it. And people will go online, they will go and they see advertisements about Forex, they then invest with little or no knowledge and lose all the money. So that is how they were able to pump way more money into the foreign exchange industry because everyone in the whole world, like I said, everyone in the whole world is afflicted by COVID lockdown, at least that 2020. So everybody's going to be looking for money to be made online, and definitely Forex is one of the best ways. Even till now, people are still trying to do something about making money online. So that is my own assumption. And with that being said, let us just dive right into it. So for the past week, I was looking at gold, and if you check gold, we're on an uptrend, making higher highs and higher lows. So, but gold did something really interesting in the past week. This was our all-time high of gold, and we broke that. We broke that, and whenever an asset class or currency breaks an all-time high, we should expect some sort of huge retracement, and that is what is happening right now. We also have this break of structure over here that has not been tested. But like I said, overall, we are in an uptrend. So we should not be surprised if we see some bullishness occur in the charts while we trade this pair. So until we get that break of structure, we cannot really confirm all ourselves, like and be fully comfortable with ourselves. So as gold broke this structure, it was a good opportunity for sellers to hop in and ride the selling wave. So I'll zoom in and show you what I saw last week. I mean, this past week. So I sold gold from here to here, and I bought gold. I bought it from here, and I'm still holding some buy positions. Now, first off, I saw this bearish wedge or bearish pennant. It's a chart pattern that indicates bearishness in the market. So I kept that in mind. But I don't trade off chart patterns. I actually trade off key levels and institutional levels that banks and the liquidity providers were paying attention to. So these areas marked in green and yellow represent liquidity. So you can see that people were selling from here with their stop losses above here. People were selling from here as well. People were selling from here as well. And then there was this huge push up that took everybody's stop losses out. And then after that bullish candle that took everybody's stop losses out, price dropped immediately from that zone really fast. That raises a red flag. And now we came to mitigate. To mitigate means to break even on the positions or to make them less harsh than they already are. So institutions need to mitigate because this position it's an open buy position. And as price is coming down, they are in drawdown, they are in loss. So they need to come back and mitigate those positions. We don't know when. Sometimes they can leave positions like this open for a very long time, months and years. But eventually they do come back to mitigate, to break even, and take their money. So I noticed that we mitigated this and we immediately fell off and went lower. So we came back. So what was in my head was that as we came back, there was this huge rejection. And so I noticed this liquidity. I noticed this liquidity, and this one. So I noticed that this bullish candle that got introduced, this demand, took out these people selling from this week and from this week, from this week and from this week. If you go to the lower time frame, you will see that those were like double tops. So retail traders were most likely selling. Look, they were selling from here and selling from here. The price was going down, so they were in a little bit of profit. They were happy. Also over here, they were selling from here and selling from here as well. So they were happy, selling. This was just the institutions gathering money. Then all of a sudden, this huge buy came in and took all that money, and then they shorted. So that also raised a red flag for me. So what I did was, I know that what they did here is the exact same thing that they did here. And they do it over and over and over again. They're never going to stop. That's how the Forex market works. So the fact that we've been respecting this candle, we hadn't broken this candle yet, we haven't broken past that candle, that was also a confirmation. Also noting this channel that I spoke about. And I took my fib and I measured the 50% of the body. I use only the body because the body contains the major orders, still contains the major orders that they took at that time. So measuring the 50% of that candle from here to there, getting my way right there. So that was where I entered from, 50%, because I couldn't enter from the open of the candle because that is too much risk on gold. It's a fair risk, but I like to put my stop loss sometimes above the wick, and that is too much. The truth is that if that's just me being overcautious. The truth is that if you're correct, price is not going to even come close. It's not even going to come to the close of that candle. So where I put my stop loss was just above this wick. Like I said, if you're correct, you could put your stop loss just a little bit above the close of the candle, just for safety. But I put it at the wick and I entered from here, and then I held position. I held my position. So if you're familiar with this channel, the bearish pennant or the bearish flag, you know that the take profit is at the bottom of the channel, and we reached there, so I closed my position. This was the sell that I took on that pair. So this was the sell that I took, and I compounded that sell. Yeah, so that's it. You can see it, kind of like the same sell. And then, so when we got here, I just waited. There were also open orders to this side, but that's another story. The reason why I didn't close those trades is another story for another time. So I've been mentioning a lot of words and terminologies that I haven't really mentioned a lot, but I will be mentioning a lot of words and terminology that you might not understand. So if you need me to make a video, explaining all those words, all those terminologies, giving a step-by-step breakdown of institutional trading, I will do so. Just like and comment down below, and I will get to it as soon as possible. All right. So when we got here, those positions. Now, how did I know that I should buy one number one? Well, I didn't really know I should buy per se, but like I said, I showed you that overall we are in an uptrend, and the target of this channel is usually the end of the channel. So if it was a bearish, sorry, I mean if it was a bullish pennant, something like this, with price ranging like this, we should expect a breakout to the upside. So that's like the inverse of this one. So and the take profit is going to be at the high. So basically, what happened on the lower time frame? I'm going to explain why I have this line drawn up. What happened on the lower time frame, basically the 45-minute time frame, was that I noticed that price started to break structure, and immediately we broke structure. I got out of all my sales. I did close some partial profit and I closed some and take profit, but I got rid of all my sales the moment we broke structure because that was confirmation that they want to take price to the upside. Because, like I said, there were open orders to the left side here. On the 4 hour, this sell candle or this last group of cells took money from these wicks that had liquidity. These wicks. And then there was a major push to the upside without mitigating properly out of those positions. Let's check the 4 hour. So you're gonna see that this cell took all this money and we ran very fast and very hard to the upside without coming back to fully mitigate. So these were open sell orders that they had in drawdown that they came later on to mitigate, which could also serve as take profits and entries. But I needed to see a counter trend break of structure. That is this. I needed to see that these highs, these lower lows and lower highs were going to get broken. So this was our counter trend. This was our sell. This lower high, lower low, or lower high, or lower low. We got, we broke that. And now we were going to retest into something, an area of interest, which is right here. These last sales before this buy. This last sales, institutions have to sell before they buy, and they have to buy before they sell. I do not really know why they do that, but that is what they do. That is how it is. They have to sell before they buy and buy before they sell. I'll research more on that and give you insight, but for now, I know for a fact that that is what they always do. That is why they have lots of open orders as they move trend and as they move price from one area of the chart to another. So we had these sales, then this huge impulsive buy that broke this structure, and then we had them create, they created liquidity, came back to sweep that money because people were buying from here and people were buying from here. So they came back to sweep that money, mitigated these sales, and start to rush up. So I bought from here and I put my stop losses below here, and you can see to the T we got in. Now this is the print screen of the buy. Yeah, you can see it. It looks alike. Straight up. We went straight up. So that's it. We went straight to the upside. And yeah, that was basically it. So the reason why I do have this blue line is because checking that 45-minute again, this is another chart pattern. It's called the inverse head and shoulders. There's a left shoulder here, a head here, and the right shoulder over here. And for those who are familiar with this chart pattern, the minimum take profit is from the length of the head to the neckline. So I drew this line, and if you extend it, it lays up right here. And now, when you start to trade properly, you would start to notice that the market connects, the market links. So I decided to look to the left. Let's get rid of this real quick. And this, well. So I decided to look to the left, and if you look, okay, my bad. Let's go to the hourly. Remember, this line was where the minimum take profit, the textbook take profit of an inverse head and shoulders is. And then if you scroll to the left, what do you see? These last sells. So I mean, these last buys before this huge push down. And now from this huge push down, we what? We entered a distribution phase and shorted. So there was supply being introduced into the market at this area. There was supply being introduced into the market at this area. And the reason why that area is because is because at this particular area, the supply was able to beat the demand because the demand is what takes price higher. We keep buying and buying, but the supply shorts price. So at this particular area, there was supply introduced into the market that was able to beat the demand. How? By breaking counter trend structure, these higher highs and these higher lows. We closed above that. So we were going to expect a retracement into these buys, but we didn't get a full retracement. Rather, we entered a redistribution phase and we shorted. Now, distribution is for selling, and an accumulation phase is where we enter. It's like consolidation, is where they gather liquidity before they take price up, before they long. While distribution phase is them gathering liquidity before they short. So since we shorted, it was a distribution phase. But if we went up, if we went like higher, it would have been an accumulation phase. They gathered liquidity to take price to the upside. So, I mean, it makes sense. Our take profit being here, and then there's this buy set of buys before this huge crash of price that broke counter trend structure. So, I'm going to be shorting from here when market opens. The truth is that I could trade this and I could still lose because that is trading, but I'm still going to see another entry and I'm going to capitalize on that. And I would really love to take this trade because the risk is quite nice. I like the risk, just a couple of pips. So yeah, so that is what I looked for while trading gold last week, and I'm still holding like a position. So let's see how it goes, and let's see how this week goes. I wish all of you guys happy trading and a happy week. And remember, please don't forget to like and subscribe and click the notification button for when I release more videos. And if you found this helpful, or if there was anything that you did not understand and you need me to break down, I will go over it extensively in other videos. So thank you very much and peace.